Hello, my friends. So in today's video, right, you will learn what is an insight bar. And after which, right, you will learn that how you can actually use it as a trading strategy that lets you capture trend and momentum in the markets with low risk. So all this and more in this week's video, right? I'll see you there. Okay, so first up, let's understand what is an insight bar. So, according to the textbook definition, an insight bar looks something like this. It's when price is inside the prior bar's range. So you can see that this red candle over here is an insight bar. Why is that? Because it is within the range of the previous bar, right? This is the previous bar highs and the previous bar lows. And it's contained within the previous bar's range. So this, according to the textbook definition, this is an insight bar, right? We call it IB, insight bar. So an example of how an insight bar will look like on your chart is something like this, right? You see this candle over here. This is an insight bar. Why is that? Because it's contained within the range of the previous candle, right? This is the previous candle low, previous candle high. So it's within the range, so it's an insight bar. Look at this candle as well. Is this an insight bar? Yes, it is, because it's contained within the range of the previous bar highs and lows. And this is another example of an insight bar. It's contained within the previous bar highs and lows. So now you have an idea of what an insight bar looks like. So let me share with you on how you can actually go about entering a trade on an insight bar. So to be honest, there are many ways you can enter the trade, right? There is no right or wrong. Ultimately, you have to find something that, suits you, right? So I'm going to share with you how I enter the insight bar trade, right? You don't have to follow me. You can trade a variation of it, right? It's entirely up to you, but I just want to share with you how I will look to trade it. So an insight bar, right, as you know what it is, how I look to trade it, for example, if I have a long bias, I would see the highs of the previous bar, which is this, right? This is where my buy stop order will be. And I'll put my stop loss below the low of the insight bar. So this is what I'll do, right? Place a buy stop order above the highs of the larger bar, the bigger bar, and my stop loss will be below the low of the insight bar. And vice versa for shorts. If I want to go short, my sell stop will be below the low of the larger bar, and my stops will be above the high of the insight bar. So I'll look to sell below this low, stop loss above the high of the insight bar. So this is how I go about trading it. So there are many ways you can do it, right? Other traders will do it differently, but ultimately, right, this entry itself is not going to make you profitable in the long run, right? It boils down to your risk management, your consistency, and everything else. So this is just, how I go about entering a trade on an insight bar. So let me share with you right now, right, on how not to trade the insight bar setup, right? The key thing is that you don't want to be trading it when the market is in a range. Because think about this. I explained earlier that an insight bar, what does it represent? It represents indecision. Am I right? So if you're going to trade an insight bar when the market is in a range, so what are you trying to do? Well, the market is in a range because it is undecided whether it wants to break above the resistance or whether you want to break below the support. So a range market is where the market is undecided where it wants to go as of now. So it's in a range, it's in equilibrium. And the insight bar represents indecision as well. So if you were to take these two together and trade it, what are you going to get? Well, if you ask me, I would say that you're not going to get very favorable results. So let me share with you, a few setups that would occur when the insight bar is in a range. So we can see, first one is spot is here, right? You see this is an insight bar. This bar is inside the previous bar highs and the lows. Then what happens is you get a choppy price action, price gaps lower, and then it trades higher. An insight bar, probably a failed trade if you ask me. So this is another one, right? Another insight bar over here within the highs and lows of the previous bar. Then price, trade higher, trades lower, and then trade higher once more. So again, this should not come as a surprise because after all, you are trading in a range where the price action is, choppy, right? It is undecided on where you want to go as of now. So my take on this is, not to trade insight bar when the market is ranging. Okay? So now you're wondering, okay, Rainer, I shouldn't trade this in a range. So when should I trade it? And this brings me to my next point. You should trade the insight bar, right, based on these two market conditions, right? This is something that I find to be reliable and useful. So let me share it with you. Number one is when the market breaks out of consolidation, right? This is an optimal time to trade it. And the second best time, right, or another way that you want to trade it is when price is respecting the 10-period moving average. Because think about this, right? Let's look at the first one over here, right? When the market breaks out of consolidation, what is the price action telling you, right? Because the market has been consolidating for a while. So what it's telling you is that, there is potential energy being stored down here. And when it breaks out, there is momentum towards the downside. And this is when, if you apply the inside bar approach, it greatly increases the odds of your trade working out because you have momentum at the back of your trade, right? So this is number one, right? The first scenario where you want to trade the inside bar. The second one over here, when the price is respecting the 10-period moving average, right? Think about this. When will price, right, respect the 10-period moving average? Because this is a pretty small moving average number, right? So if price is respecting the 10-period moving average, then chances are it's probably be in a very strong trend, something like this. It's going to be in a very strong trend, and this will be the moving average that, price is respecting, right? This line here is the moving average, the 10-period moving average, and this over here is basically the price action of the markets. So if price can respect the 10-period moving average, it's telling you that the momentum is very strong. Okay, so let's have a look at a few examples to, illustrate my point. So you can see over here, this is clearly in a range, right? And when price breaks out of the range, this is where, momentum is, obviously, the market has signaled to you that it wants to trade lower. So if you trade inside bar in this scenario, you know that you have the trend at the back of you, right? You have momentum with you. So this will be the first inside bar setup over here, right? This is an inside bar. This is the previous bar's range, right? It's contained within this previous bar range. You can look to short with a sell stop order over here. Stop loss above this high over here. Another inside bar here. So you can look to place a sell stop over here. Stop loss above this inside bar high. And this is another inside bar, right? It's being contained within the previous bar highs and lows. Place a sell stop below the low. Stops above the inside bar high. So with regards to the specific entries and exits, or entries and stop loss, right? There are a few ways you can go about it. And you have to find something that suits you, right? I've just shared with you what works for me, but it may or may not, be suitable for you because you're not comfortable with the way the trade is being executed or the way your stop loss is being placed. So you have to find something that suits you. But ultimately, the concept is still the same, right? The principle behind why it works. So an example of how you can use it with the 10-period moving average, right? This orange line over here is the 10-period moving average. You can see that when price is respecting it, it's telling you that there is momentum in this market. And this is why it cannot break above the 10-period moving average. So this is another inside bar over here, right? It's contained between the highs and lows of the previous bar. You can look to place a sell stop on it, right? And price, you trade lower. You have another one over here, an inside bar over here within the lows and highs of the previous bar. And then you can see, right, there is momentum at the back of your trade. So now I want you to think about this, right? I would say the biggest, I won't call it the disadvantage, but a slight disadvantage if you were to trade an inside bar in isolation is that you may not get many trading setups because you're looking for something really specific in the market. So what I would rather do is to educate you the thought process, the price action behind why inside bar work. Right? You understand that if there is momentum behind it, right? There is a trend behind the inside bar entry signal, right? It greatly increases the odds of your trade. So an inside bar is just basically indecision in the markets. So another variation of inside bars is that you can look for is this. Number one is what I call the fakie, right? I did not come up with this term, right? I will credit it to Nell Fuller from Learn to Trade the Markets, right? He came up with the term the fakie setup. And other variations is the continuation patterns like the flag pattern, pennant, triangle, etc. Right? These are all variation of continuation patterns in the market, right? All these patterns, right, signals that there is a potential for the move to continue in your direction. So let me share with you a few more examples, right? The fakie setup. So what is a fakie setups? So for example, this is the candle, right? This is the inside bar. Let's say something like this. And then you have a candle that looks something like this, right? It basically looks like a pin bar, right? Price open over here, trades higher, they come down lower and close over here. So this is called a fakie setup, right? Fakie setup. So basically you have a false breakout higher before price close lower back into the range of the inside bar. So again, you can trade it in a similar way, right, with a sell stop below the low of this larger candle, stop loss above this high over here. So this is how the fakie setup works, right? You are actually taking advantage of traders who are trapped from the long breakout over here, right? They are now trapped because it was a false breakout, and if price trades lower, you will, chances are, see that their stops will get triggered along the way. So you can see that there is a fakie setup over here, this one. You can see that this is an inside bar. Price opened here, traded higher, and came down and closed back near the lows over here. So you can take advantage of this setup, right? Place a, a sell stop order, stops above this high, and, see what happens next. So this is basically, the concept of how the fakie setup works. So on top of it, right, continuation patterns, right? Sometimes you don't see a fakie, sometimes you don't see an inside bar, but you see continuation patterns, right? Classical continuation patterns like the flag pattern, the pennant, the triangle, they're all continuation patterns in the market, and they're all telling you the same thing as the inside bar, right? They are all slight indecision in markets, right? And then when it breaks out, it trades lower, right? There's indecision, right? Because there is, you see the bars are getting smaller, right? And then it breaks out lower, another flag pattern, and then it breaks out lower. So if you ask me, right, to me, right, the inside bar is like a continuation pattern when you have the trend and momentum behind you. So sometimes you don't get the inside bar pattern that you're looking for, then understand that there are other variations of it, right? Don't be too fixated at just the inside bar, because if you do so, you're gonna miss a lot of trading opportunities, right? Don't go and memorize patterns, right? Understand the price action behind it and trade it. Okay? So before we conclude, let's do a recap of what you have learned today. First and foremost, right, I shared with you how I trade the inside bar, how I look to enter it and place my stop loss. Then I'll share with you, how not to trade the inside bar, right? The worst time to trade it is when the market is in a range. Because when the market is in a range, it is choppy, it is undecided on where it wants to go, and if you apply the inside bar entry in the range, chances are you'll be, chopped up as well. And then the last part, we talk about how to actually trade the inside bar. Alright, to trade the inside bar is where you wanna, when price, right, breaks out of consolidation. This is the more optimal time to trade it, and when price is respecting the 10-period moving average. Because this is where you have the trend with you and there is momentum behind your back. And last but not least, right, I share with you variation of the inside bar like the fakie setup, the flag patterns, the pennant, etc. Right, instead of just memorizing the inside bar trading setup. Okay, so I hope you find this video useful. If you like more of my work, right, you enjoy it and you find it educational, you can head down to my website, tradingwithrainer.com. I have a ton of articles, videos, and etc. And everything is for free, right? Go down there, check it out, right? Absorb the knowledge. If it works for you, great. If it doesn't make sense, right, that's fine as well, right? So all in all, I hope it improves your trading and give you the edge that you need in the markets. So if you have any comments or any feedback, don't hesitate to let me know in the comment section below. With that, I wish you good luck and good trading. I'll talk to you soon.